Hello again, my Massachusetts home buying and selling brethren. This is your real estate enabler, Dan Bernal, here in the heart of the North Shore, and I'm coming at you today with a tip to keep you current on what's been changing in market conditions here in Massachusetts. We have seen one hell of a year. This is basically the year that real estate came back here in Massachusetts. We've seen a lot of steady growth over the past couple of years, but we've just crossed 16 consecutive months of year-over-year pending home sales gains, which means each month has beat the corresponding month in the prior year as far as sales volume. This August was the 16th month that it beat the August prior, July beat the July prior, and so on and so forth. We've now seen, this is no longer a blip on the radar, the trend is growth in Massachusetts. This also means prices have been going up. And in many areas they've been going up for a couple of years, but now statewide you can really see the effect. We're seeing growth in volume, growth in sales price. So real estate is really coming back pretty strong right now. What this has done, though, is change a lot of the dynamics for how things are marketed. Let me explain. When you have more of a buyer's market, you tend to see a lot more inventory and a lot less buyers, and the typical strategy you're going to see for listing is a property goes on market for a little more than they expect to get out of it. A buyer comes in, makes an offer a little below that, the two go back and forth, they wiggle into a comfortable spot. Typically in the past couple of years it's been between about 3 and 6% off of the listed price, so you're going to settle around somewhere 95, 96, 97% of the asking price, and you call it a day. When you have more of a seller's market, which we're heading into in some sub-markets here, and in general, I think we're going to see that pretty much those conditions across the board fairly soon, you see a lot more buyers, a lot less available inventory, and a slightly different marketing strategy sometimes. What we see sometimes is that listing brokers will put a property on for a little bit less than they expect to get out of it, just to drum up as many people as they possibly can, get as many offers as they can, and pit the buyers against each other. How this works is rather than the seller picking their favorite offer out of that and negotiating with them, they're going to go back to all the buyers, all their 10 or 15 offers that they managed to drum up, and say, we're looking for best and final. What best and final means is, give me more money. I'm not going to tell you how much the other offers are, so I'm not going to tell you whether or not yours is positioned high, low, whether you're already the winner or you're nowhere near. I just want you to give me more money. This works. For lack of a better word, it works. It gets people thinking, well, I wonder what the other offers are. I don't want to get beat out. And you end up throwing even more money at it and occasionally going way above the asking price. In many of these cases, going above the asking price no matter what, but sometimes significantly above, and it drives up the sale price. Now, the way to gauge what you should be offering on any property, no matter what, is through comparable sales. Market value is determined by nothing else than recent comparable sales. So you should first be doing your homework with your agent to make sure you know where you should be spending for a particular property, but you should also be looking at the stats to see how things have been marketed in that particular submarket with respect to things like this. Because if properties are now selling well above the asking price, and you're going in there thinking, well, they want $5.99 for it, so I'll offer them $5.75 and we'll go back and forth, you may never have a chance because you're looking at things from a different perspective from the way they used to be. So you need to determine first what the property's value really is to you based on comparable sales, then look at how things are marketing in that area and determine whether or not this is a good property for you to bid on, because you've got to make a reasonable bid if you're going to be taking a shot at it. There's no point in looking at an area where everything's selling for 102% of the asking price and coming in at 97%. It just makes no sense. So let's say multifamily properties. I work a lot in multifamily properties. In Belmont, so far this year, there have been 25 that have sold. Of those, 11 were between $500,000 and $600,000. That's the hot spot for multifamily properties in a number of towns. Those sold at an average of 99% of the asking price. In Watertown, 39 year to date, 19 of those were in the $500,000 to $600,000 range. This is really the hot spot for multifamily homes just outside of the city. Again, 102% average list price to sale price. It's across the board. In Arlington, you're going to see the same thing. 99%, 101%. In Medford, this is all multifamily homes. This is just one sub-niche, but it's one I work in a lot, so it makes a good example. Here we go. In Medford, again, 102%, 101%, 100%, 100%. This is broken down by price range. And price range after price range after price range, we're seeing above asking. So when you're looking at making an offer, you got to look at both what the property's worth and what the trend is in that area, and make sure that you should be bidding on this property, and if you should, you got to bid wisely based on what's really going on in the market. You can reach me anytime at dan.bernal@beamgroup.com. You can give me a call at 617-275-3291, or you can find me on the line at danbernal.com. See you next time. Bye.